There's been a massive overhaul of the pharmaceutical industry nationwide. This year alone, there have been more than a dozen major mergers of companies worldwide, including Pfizer's proposed $100 billion buyout of AstraZeneca, Valeant's bid for Allergen, and last week's three-part deal between Novartis, GlaxoSmithKline, and Eli Lilly. So what does it mean for the industry, and will customers end up footing the bill? For that and more, we turn to Jeff Kraws, Senior Pharmaceutical Analyst with Crystal Research Associates. Jeff, welcome to XChange. Thank you so much. So what is driving all of this merger activity? We have seen a rise in M&As generally throughout all industries, but there seems at least a perception that the pharmaceutical industry is just interested in tying up.
It's faster for them to buy the revenues than to invest long term. They're also strategically trying to pair themselves up so they're not the last one without a seat. What they're basically doing is strategically looking at their options to figure out where they don't have the strength, trying to buy those assets if they can, and sustaining their earnings while they're doing it is the key trick.
And is part of what's going on that many of these companies don't have a lot in the pipeline, in the R&D pipeline, and they want to buy basically somebody else's pipeline?
Well, they've been spending, part of that is true, they've been spending a lot of money, but what they've been trying to do is buy differentiated technologies. Because right now in the healthcare arena, if you don't have a differentiated technology, you're not going to be able to charge premium pricing.
What do you mean by differentiated technology?
You have to have something that is new and improved, really new and improved. It has to help people survive longer, it has to work better, it has to have fewer side effects, then you can charge a premium. Otherwise, the pharma companies who have been losing a large portion of their portfolio to generics then don't get their premium pricing. So they are right now trying to do two things: sustain their earnings by buying companies and try and acquire their pipelines so that they can bolster what they have going forward. Keep in mind, areas like oncology with this aging population, there are cardiovascular, there's oncology, there are areas that are going gangbusters.
When you look at these tie-ups, the names we mentioned are some of the big names merging with other big names. But what about some of the smaller deals? Are big companies buying smaller biotech firms? Are they looking for much smaller deals out there?
They are. You're seeing a lot of the smaller biotechs merge with the medium biotechs. You're seeing some of the bigger biotechs buy some of the medium and smaller biotechs. Pharma's always had a track record. I was the head of competitive analysis at Bristol Myers Squibb for a number of years. So back in those days, you didn't want to acquire something that they had a product on the market. Nowadays, they really want the product to be out there and proven. If it's not, they have to identify it as having an extremely disruptive technology, either to their revenue stream or to someone else's, and then they'll go after it. Otherwise, they tend to wait.
And what kind of patent risk is there then when they're buying up these entities, because the patent is still a very short cycle for many of these drugs?
17 years is what they get on the patent from the first day they're filing it. Some of the drugs have very short patent life left, but some of these companies have drug delivery technology that they can apply to those drugs to get an extended patent life.
So from an investor standpoint, historically, how have these mergers worked out? Because usually when you have companies in industries merging together, there are a lot of problems, cultural problems, operational problems. Historically, how have these worked?
Case by case, some of them have worked out really well, some of them have been disasters. But it really depends on the individual company. We always say management. That's really a very key element to making a merger work. And I think with the pharma industry, we'll continue to see consolidation in the industry. But I do believe with the aging population and the increased utilization of drugs, the prescriptions represent the right prescription for financial health.
And do you expect significant layoffs from all of these mergers?
I do. They will create synergies, but they'll create synergies largely by downsizing and getting rid of duplicative functions. And
who's therefore protected the most inside of these companies, do you think? The scientists? The
acquirer.
The acquirer is the company that's acquiring it. If you work for the acquirer, you're in far better shape.
You're in far better shape.
So what's the regulatory environment then? Because we haven't heard a lot of pushback just yet on some of these mergers, but do you expect that to happen?
Probably not, because a lot of them have, the companies are getting so large that where there's going to need to be divestiture, it's taking place ahead of time. You're seeing that with the GlaxoSmithKline and the Novartis, where one company really wants to gain the vaccine expertise, particularly in meningitis. And, on the consumer front, you're seeing an Excedrin and a Theraflu merging up with a Sensodyne and an Aquafresh. And
so there's sort of two different products.
Two different products.
And does that, therefore, should consumers not worry too much about pricing power of these deals? details. Are you seeing pricing going up because of mergers?
I don't think you're going to see pricing go up too much, because right now with the new Affordable Health Care Act as well as the competitive arena, healthcare is still early as far as, you know, in the merger game. Even though you're seeing tons of mergers, it still is very early, because this is not an industry where you're down to, you know, 1, 2, or 3, for instance, mobile phone carriers in the United States. The human body functions very differently, and your primary function here is you have to have a superior product. If you have a product that functions better in the human body than someone else's product, you'll be able to charge a premium. If you don't, you won't.
We're starting to see a big explosion in healthcare costs over the last 30 years compared to the last 30 years. Is this related to the Affordable Care Act, do you think?
I think it's not related to the Affordable Health Care Act yet. The first quarter saw the largest healthcare spending with that 9.9% of GDP. There really aren't that many people signed up for it yet. You know, even with the 8 million newest numbers, if they're accurate, that sort of came towards the end of the first quarter. But you can expect healthcare expenditures to increase significantly with that program.
Okay, Jeff, thank you so much for your analysis
Pleasure.
today.